Hey guys, good morning. Hope everybody's well. Today is January 26th. Hope you guys are doing very well. Market is very resilient. Yesterday, Intel announced earnings, Visa announced earnings, KLA-Tencor announced earnings. Intel was not a very good earnings report, especially in terms of the guidance going forward. They're expecting nearly $1 billion less in revenue than the street forecasted, even for Q1 and let alone the next year. So even with that, the market is still strong. Nasdaq is up about, it was down on the pre-market. Nasdaq futures showed 100 points almost down, and then now it's back up again, about 20 points up. So this is a very resilient market, lots of cash on the side, which I think is what is driving the market. One of the companies that showed up on my radar is Intuit. They're hitting 52-week highs. They're a very strong company. They've been consistently performing over the years. I thought we'll take a quick look at this company, see what's working well for it, what's not working well, what it might do over the next couple of years or so. Intuit makes a whole series of products, but they've acquired a lot of the products. So they're best known for QuickBooks, which is the accounting software used by a significant number, over 10 million customers worldwide. And then TurboTax, which is the tax preparation software for the United States, used by over 35 million customers. So Intuit has QuickBooks and TurboTax. QuickBooks makes up roughly about nearly 60% of their revenue. People use it, either self-employed people or small businesses, or even accountants use it for managing the books, bookkeeping for many companies, self-employed people, or even organizations. TurboTax is just filing software. TurboTax, both for business and for individuals, helps companies and individuals file their taxes. Credit Karma is a new acquisition, doing about $1 billion a year or so, and they make mostly money through referrals and affiliate fees. And then Mailchimp is their marketing software that allows them to be able to do email marketing, which is also an acquisition. So Credit Karma acquired by Intuit, Mailchimp acquired by Intuit. The company has been around for quite a bit of time. This is back in the days. They started in the DOS days. I remember accounting and bookkeeping was Intuit, which was done back in 1990, I think, when I first saw them. They've been around for a long time. The stock's been doing extremely well. They've done very, very well even through the uncertainty. Even through 2023, which was expected to be a recession year, many people were anticipating a recession. They've still done 13% increase in revenue to about $14 billion. The GAAP operating income also did very well, up 22%. So they've done a much better job of managing the top bottom line very well compared to growing the top line at 13%. And dilute DPS also up 22%. So excellent job, much above the original guidance. If you look at it, their top line wasn't in line with the guidance, but the rest of them, they've done a very good job. They continued that in Q1 of 24, which is the last quarter, most recent quarter that they announced yet. Still doing about 2.3, almost about $3 billion in revenue, growing at 50%, 15% year over year. Operating income has done a very good job. They've increased operating income by being much better on costs. So what does Intuit do? They focus on helping companies manage their books and individuals also manage their taxes and manage their spend. So the opportunity is essentially about, give or take about $300 billion. They are very strong in the US. They want to expand globally. And they also want to be able to do beyond what accounting really is. The core market, accounting and taxes, about 80 billion. They explore things like email marketing, which is through Mailchimp. And if they explore things with Credit Karma, being able to give them consumer-specific offers, then that expands it to 250 billion. And they go global with this. It's about a $300 billion opportunity. They've penetrated about 5% of that market so far, 13 billion, 12 to $13 billion. Okay, so what is it that Intuit actually does? In the future, what a lot of individuals and businesses want is not just do it yourself. They want it done for you. Do it for me is another way to look at it. Customers want to be able to have their accounting done, their time tracking done, payroll. So all of the business stuff that they need, they want to be able to have Intuit do for them. They have about 10 million small businesses that are currently customers of Intuit. They believe that with AI, they can actually get Intuit to a point where they can make a tremendous number of machine learning predictions to be able to do a better job of managing accounting and automating it as much as possible. And they collect a lot of data about their customers. The payroll that they facilitate is close to $300 billion annually. And then going from small business, You go towards self-employed people, that's roughly about 13 to 14 million in the US, and then consumers who are more in the give me loans, do my taxes, manage my spend, help me save money. So they have a whole host of 10 million small businesses and about 90 million consumers who use the product. Roughly about 25% of the people, no, roughly about 75% of the people that file taxes use TurboTax, or they go to H&R Block, or they go to Jackson Hewitt Tax Services, etc. Where are the opportunities to grow the core? Okay, so now they're moving a lot of customers away from the DOS-based system, the Windows-based on-premises on your desktop system to online. That becomes an annual recurring revenue stream. That's growing at about 10%. That's the number one opportunity, QuickBooks Online. And then because of going QuickBooks Online, the ecosystem around QuickBooks doing payroll for you, connecting you with a accountant, and they take fees from that for referral, all that is growing at about 30%. Online Advanced gives you more capability, being able to have, and of course, their average revenue per customer is a lot more for advanced QuickBooks than it is for basic QuickBooks. Advanced QuickBooks, as I mentioned, helps you do payroll, helps you manage your money, helps you be able to get loans, a lot better for businesses to be able to grow that on an ongoing basis. Now, TurboTax for the longest time was also a desktop software. You came in, you answered a bunch of questions, you put all your W-2 information, you look at your what credits you can get, and then file your taxes. TurboTax Live essentially allows customers, they've increased the number of customers, which is surprising to me, but not very surprising as well. The surprising part is they've increased the customers who come into TurboTax by 12%. The not so surprising part is more people are filing taxes. That means they're going to grow anyway. Revenue has grown about 17%. They've done a good job of managing margins. And then QuickBooks Live, which allows them to be able to make sure that they can have ongoing help for accounting when the customer needs them, also is up about 11%. Okay, the next part is connecting the ecosystem. And that, as I mentioned, is MailChimp, Credit Karma. Those are the products that they've acquired. And what they do, essentially, let's look at each of these in detail, right? Credit Karma takes your data. They started out managing your credit history and your credit profile. So they collect scores, 5-4 scores in the US, as they call them, from 3 different organizations, but they present it for you from TRW and Experian, and another one is Equifax. So they show that information that says, here's where you are in your credit journey. Here's your credit score. They can help you improve it, or they can help you get the right offers. So that's the match members. So a whole lot of people use it just to track their credit score, make sure that there's no big changes that are happening to prevent fraud. Once they do that, once they know that your credit score is 700 or 750 or 800, then they go to American Express, Capital One Financial, Bank of America, match the right kind of credit cards that are offers, and they make money in being able to match members to the right offers. That's the Credit Karma piece. Okay, so payroll, they actually allow customers to be able to manage roughly about 30% growth in this business is about $300 billion in payroll that is managed by Intuit. And they make anywhere from $4 per month per employee that is managed, all the way up to $12 per month per employee. There's a lot of growth in this segment is what they feel as well. Payments, so they also allow you to be able to manage payments to vendors, third-party vendors, very seamlessly, very easy, which is why one of the things that is interesting to me is they could get into this business a little bit more aggressively and try and acquire a company in the payment space and really grow from there. Some of the targets might be Square, which is about $30-40 billion in market cap, or a much bigger one, maybe PayPal in the $66 billion market caps. Intuit itself is about $130-140 billion in market cap. And then MailChimp, this was a little bit of a left field, but it makes sense given that they're going after small businesses. Small businesses are the big customers for Intuit. And MailChimp started providing email marketing services for a lot of the small businesses, and then expanded now to provide website marketing services, and they also provide SEO services. So MailChimp has also helped them grow and expand into their customer base. Roughly about $9 billion in sales is attributed to MailChimp. And then how to expand globally? They actually look at what they can do to be able to increase the amount of revenue from outside of the US customers. So they can use MailChimp as the tip of that spear to be able to go to more customers, and also try and expand out accounting usage. Most accounting usage is going to be difficult. For example, I know in 3-4 different countries that I've operated in, India, for example, has Tally, which is a big accounting platform used by everybody, literally every small business in India. And when I've been in the UK, it's also a little bit different. Sage is very popular there. So there are different systems in different countries, but they can still expand. So what are they trying to be able to do? From a long-term perspective, they want to be able to manage and put big bets. I think their big bets are primarily in the areas of being able to make sure that they can get to more SMB customers from an expanded revenue standpoint from the core of the base, and then also at ancillary services. And they review that. So this is more of their process. This is their operating principles, operating process, their what they call rhythm of business. Okay, what are the opportunities? With AI, every company is looking at AI. Every CEO is saying, what can we do more with AI, right? How can they benefit their customers, make it easier to reduce the cost from using and managing their accounting and their books and their bookkeeping? Um, the other one is with their live platform, how can they help actually customers completely take over their accounting and finance as opposed to having to worry about inputting the data in? And then be the source of growth for SMBs. This is primarily allowing their customers to not, and another thing that would be interesting for Intuit is how quickly they can put together partnerships with people like Shopify, that most of the businesses now that are selling on Shopify, they're selling on Substack, things of that nature. Digitizing payments, as I already mentioned, some of the bigger companies in the space are like Bill.com, but Intuit has a good play in this market to be able to grow their footprint as well. And then the big risk is Intuit is still considered as a much slower company. Um, and if you look at the stock price, we'll go through that in a little bit. It still seems to me that they're slow and steady, not the rocket boat and move it quickly kind of a company. And then as they get more international, as I said, there's much more competition international than not. So total small businesses, they're actually growing very, very well. This was a couple of years ago, just to give you a little bit of context. So when they were growing, consumer revenue is about right now about 4 billion. The business revenue from self-employed people and businesses is about 8 billion. So that's about 12. The total revenue is about 14 billion. So Intuit does a total of about 14 billion, 8 billion coming from businesses, from Quicken, QuickBooks, things of that nature. And then another 4 billion coming from consumer remotely tax, and about 1 billion or so coming from Credit Karma and MailChimp, etc. Okay, so they've been at, as I mentioned, they have a long history. They've gone from Quicken DOS, which was a bookkeeping system just on top of text-based input systems, and they've gone all the way now to the right, which is online QuickBooks Global, QuickBooks Mobile. They've done a very good job of being able to keep up with the times on an ongoing basis. Over 10,000 employees right now. As I said, 90 million consumers, businesses, and businesses about 10 million. Very, very strong. So segment-wise, financial services, which is bookkeeping, is the biggest amount of money. They make about 20%. Employee management, which is payroll management, hiring, etc. Payment solutions only about 10%. That's a very big opportunity for them to be able to grow their base. So as I said, nearly about 60% of it comes from businesses, accounting professionals, and you are people that do businesses in bookkeeping for others. They tend to be about 11%. So everything else on the 60% is essentially QuickBooks, and the consumer tax, which is TurboTax, is about 40% of the business. A lot of companies, this market is extremely competitive. A lot of companies, so you look at the products that Intuit offers, from QuickBooks Self-Employee to TurboTax to QuickBooks Online to QuickBooks and suppliers, invoicing, payment, etc. There's a ton of competition, mostly startups. NerdWallet's public, Zoho also, Bench, which provides accounting software, Wave, which provides invoicing software, FreshBooks, which provides, so a lot of these companies are trying to hit QuickBooks in various different areas themselves. So the market is competitive, but still QuickBooks has been able to execute very, very well with a market share of nearly about 70% in the US. Outside of the US, different story. Okay, the accounting software system itself is incrementally expected to grow to about 1.4 billion, 64 billion next year. And then if you look at 2030, it's about a 6% year-over-year growth. So market opportunity exists, but 30% of the growth is coming from North America, rest of it is outside. That's the international portion. If you look at what are people searching for, still it seems to be that even though there was a lot of companies, Sage, GoDaddy, and QuickBooks tend to be the primary ones, Xero as well is another smaller vendor. The number of people that are searching for cloud accounting systems is pretty significant. Now, accounting is different from what we talked about SAP, ERP yesterday. One of the companies we went through yesterday from an ERP standpoint was Workday. That's used more by big businesses or medium-sized businesses, whereas accounting, finance management by Intuit is more of a small, medium business issue. Okay, so we look at Intuit, global market share 61%, extremely strong. From a tax perspective, 40% is done by pros, 45 to 50%. Intuit has another 25% market share. So a strong market share in the two big markets for them. And then when they look at being able to do your taxes for you, they still have a very strong market share there as well. They've been growing. The Intuit market share, just tax preparation software, they've just done a tremendous job. If you say, okay, the 25% that is just tax preparation being done by individuals by themselves, do it yourself, 40% of that, nearly 70% of the market is owned by Intuit. Okay, so where do they see the opportunity for businesses? There's the invoicing, accounting, bookkeeping, managing, billing, HR, payroll, all of that stuff, which is QuickBooks. And then manage and get your business online, which is how do you get landing pages? How do you get websites? How do you get web stores? How are you able to go ahead and do email marketing? That's where MailChimp comes in. So they can bring this together for a customer end to end and be able to grow the business from there. Intuit, as I said, makes his money from small businesses. About this year it's about 8 billion. Consumers is about 4 billion. Credit Karma and ProTax. ProTax is mostly for people that are being able to do taxes for you. And revenue is about 14 billion or so in 2020, well, trailing 12 months or the next 12 months, 2024. Okay, where do they make their money? Most of it is from QuickBooks Online, US and Canada. You can see the two big markets for them are US and Canada. They don't tend to compete very, very much with some of these other guys in these markets very well. But as you go around, Xero is very strong in Australia, Canada. That's the number one company, and QuickBooks is 10% market share, only 20% market share in UK. So outside of the US, not as strong. Within the US and Canada, North America, they're doing close to about 40, 50% of the market, as you can see. Okay, so if you look at the accounting software companies for small businesses, QuickBooks Online is the number one, really growing very fast, really growing very, very well. Okay, 30 million companies use QuickBooks, very strong. They tend to be used by marketing agencies, for the most parts, IT companies, mostly 1 to 10 employees, and United States and Canada are the two biggest ones. People that use for tax filing, still most of the taxes are being filed either by individuals, independent people themselves, 50% of the market, and then by CPAs, another 30%. So that's just a background about Intuit. Now, let's quickly go in to figure out what is it that the stock is telling us. All right. We always start with the fundamentals and financials first. First, on an annualized basis, let's look at their revenue statement. On an annual basis, QuickBooks has gone from $5 billion in 2017 to nearly 3 times. So this is very good growth. Teams going down, and then tremendous growth in 2021, 2022, as more people started to make business online. That's another thing that's going in their favor. The big advantage for them now is a lot more people in the last 3 years have started their own businesses after COVID. So roughly about 70-80% gross margins and about 8% net margins. On a quarterly basis, revenue, which was going down to the single digits, now seems to have gone back up again. That's a good sign. Yeah, roughly about 70-80% gross margins, about 7 to 8% net margins. Balance sheet should be okay. Again, they are a company with $180 billion. We wouldn't expect them to have a lot of challenges. They have about $6 billion in current assets, a lot of it probably in goodwill because of the intangible assets. It's goodwill probably because of the acquisitions. About 6 billion in cash and about 3 billion, about 6 billion in debt. So this is a little bit of a challenge. I have quite a bit of debt on the books. 6 billion in cash, 6 billion in debt. But as long as they get, so their cash flow has been a little bit of a challenge over the last few months, if you will. Okay, so growing at about 10 to 15%, 70 is high. P is very high. Price to sales is about 12 times. That's also very high. Margins are good. On a scale of 1 to 10, I'm going to give this a 6. Debt is very high. Valuation is very high. Okay, so look at the monthly chart. On a monthly chart, they should, so they had been waiting to get to an all-time high is about 720. They're about 645 right now. So they probably will make the move again. On the long-term chart, on the monthly chart, this is still a very good uptrend. All right, let's go to the weekly chart. It's going on the weekly chart. Okay, so that was the uptrend that we saw. The all-time high was in November. Was it November? Yeah, it was November 2021. It's probably heading back towards that point anyway. So you can tighten this up a little bit, but not by much after a good consolidation period. So this was a stage 1 climb, stage 4 decline after a stage 3 consolidation. A little bit of a move up against stage 1 decline. Very good. This was essentially what you would call a stage 1 accumulation period, stage 2 markup period. So right now they're still in stage 2 going up. After an accumulation period. So this did very well, 52-week high. So they're probably heading out. This is not a stock that is going to grow very fast. This is not a stock that you can expect to go 30, 40% in a month or something like that. This is going to be slow and steady. Every time it touches the 100-day moving average, or maybe gets close to the 200-day moving average, you want to be able to buy and hold. It'll give you a steady 20, 30% year over year. Let's look at what it has done over the last year or so, just to give you a little bit of a better sense of how the stock behaves. So 645 is where the current price for the stock is. It's at the near the 52-week high. It's going to take the moving averages are all pointing in the right direction. It's still not in the overbought state, so I like that. MACD is also on the right view. You look at how it has performed over the last year. This is still being a little bit slow, so I'm going to give it a little bit of time. So this is a stock that tends to move up a little bit, consolidate. So this is just a roller coaster stock parts, but very tight range. The ATR on the monthly basis is probably about 100 points or so. So you're not going to expect it to go very quickly up too fast. At the same time, not going to go way too much down as well. The best it has done, if you look at it from a annualized basis on a weekly chart, it went from about 700 down to about half that. So it went 50% down during the correction phase in 2021, 2022. So that has been a little bit of a challenge. So what would I expect the stock to do? Earnings are coming up in a few days. When the earnings coming up in about 1 month, it's on the February 22nd. Okay, so before earnings, not going up. Remember, it's not going to go up way too high too quickly. The highs that it expects to hit to are still in the 780, 790 range, as we saw on the monthly chart. So this is the 700 range, 720 range. So while it's not going to go from 645 to 700, I would expect it to move a little bit up, consolidate a little bit in this direction, very similar to this pattern. Move up, consolidate a little bit, get close to 650, and then make a little bit of a correction down, come back to the 50-day moving average, 20-day moving average. This is a 20-day moving average, 615, and then move back up again. This is going to be a slow and steady winner. Thank you very much for watching. Let me know what you guys think. Actually, I was going to show you this, right? This is still taking way too long, so I'm going to bail on that one. Oh, it came up just when we wanted it to. Maybe that's what we got to do. We just got to wait on this page for a couple of seconds. It's performed well. We look at it in the last 1 year. This is the 1 year chart. It's gone to 657 from the place of 300. Yeah, it's gone up very, very well, about 70-80% for the last year. 2023 was a good year for Intuit. From an overall perspective. Thank you very much for watching. Let me know what you guys think. I'd love to be able to get your feedback. Have a good weekend.